Hi there, everybody. My name is Allison Ostrander, and I'm the Director of Risk Tolerance here at Simpler Trading. And in today's video, I want to talk about a setup on LRCX, specifically on this weekly time frame. So there are a few things I like about this chart with the idea that it's going to move higher. The first thing is we had a recent true low down in this consolidated range, which is usually a good sign of a longer term trend move coming up and a good discount price to get in prior to it happening. And as you can see, that's already started to move higher from it. We have a squeeze setting up that's still valid, a bullish signal on the compound breakout tool, and room on momentum turning green, moving higher with room to the upside to continue. But what I really like about this chart is that we have a recent bullish divergent bar printing, and bullish divergent bars on the weekly chart have a really great follow-through rate looking for that move higher. So the trade idea I was looking at and considering here was to go out to July 19th. This gives you time not only for the squeeze, but allows for the 3-bar rule for the divergent bar to try and get a follow through. And at least as of right now, if this bar, keep in mind, it does need to remain valid going into Friday. So if it is, currently the high of the week is 1069.12. So going with a 1070, 1080, 1085 long debit call broken wing butterfly. You can see the cost basis is about 222. That allows, let's just call it 220 for easy math, right? Given that the market's jumping around. 220 cost basis, that's a 780 max profit potential for the pin. But the nice thing about debit broken wing butterflies is, let's say the move all of a sudden happens next week and we find ourselves at 1100 by Friday. Not only will this gain value if the move happens more quickly compared to a standard butterfly, right? It will have a greater possibility of turning into profit. But if it goes completely in the money, it has a forgiveness factor of a 280 profit potential if all these strikes remain into the money by expiration. And that, of course, in and of itself is still a pretty good risk versus reward based off that 220 risk. If you like the idea of us going back into this range or moving higher and want to move your strikes up, maybe to that 1100 level, you can. It should reduce your capital risk some, but keep in mind it's a greater move that you need to move. Also, the strike increments currently only go in 10-point strike increments, so you'd have to do something like a 1510 broken wing butterfly, which is still about a 220 cost basis, increases the max profit potential to 1280. And then once again, if this were to go completely in the money by expiration, still has basically a 280, 285 profit potential of forgiveness factor for all the strikes in the money. So that's the ideas that I was looking at if this bullish divergent bar remains valid into Friday's expiration. Thank you guys so much for joining me. As always, may the trade be with you, and I look forward to talking to you next time. Bye. Hey, Allison Ostrander here, Director of Risk Tolerance at Simpler Trading. Thanks for watching the video. If you enjoyed this video, please be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. As always, may the trade be with you, and we'll see you in the next video. Bye.